Hey guys, how's it going? Today we're going to be talking about Tesla. Now, they just had their Q3 2025 earnings. So we're going to be going through that. And we're going to be going through my thoughts on the stock price, where I think it might be going, and, where I'm at, what I'm holding, and what I think a lot of the bears are just completely getting wrong in this stock. So, it's nearing $450 a share just since my last video here. I mean, it's up 35%. That's where I said that, I'm more bullish than ever. I do have a position in it, up about 152%. So, I'm turned 12.5K into roughly 31. It's still obviously a relatively small portion of my portfolio. It's single digits. But just to show you, I gave you guys a little bit of transparency last time. So I'm going to give you my thoughts on whether I'm holding this, what I'm going to be doing with this position that I have going forward. In terms of this quarter, I think maybe Tesla can summarize it better. So I'll quickly read this here. In Q3, the Tesla team achieved record vehicle deliveries globally. This just shows the strength and the growth across all regions, while also achieving record energy storage developments across the residential, industrial, and utility sectors. This strong performance resulted in both record revenue and free cash flow generation for the quarter. We're going to be talking about that. Why was the stock under a little bit of pressure when we had record revenue? Why were expenses up? That kind of thing. And what I think a lot of people are getting wrong with that. We continue to launch new products that excite our customers across the automotive and energy. We launched the Model YL and the Model Y Performance, and further expanded our vehicle offering with the Model 3 and Y standards. So that just came out cheaper. That's only available in the US as far as I'm aware, not in Canada or anything like that. So that's their most affordable vehicles ever. That's going to be hurting the margins a bit, but we'll be talking about that. We also unveiled the Mega Pack 3 and the Mega Block, which will further simplify large battery installations by reducing cost and time to deploy. My understanding is the Mega Block is essentially just kind of like all the complicated components that people that are deploying large forms of energy just don't want to do. It's kind of all in one. We believe our scale and cost structure will enable us to navigate the shifting market dynamics across the globe more effectively than our peers, with advances in AI making our products the most compelling on the market. And we're going to touch a little bit more on that. I think a lot of people are missing that too, in terms of what is going to be powering AI going forward. I mean, everybody's focused on the chips, everybody's focused on the companies, but what about the power? And Tesla seems to be focused on a little bit of that. We're going to get into that a little bit later. Our focus remains on scaling our core hardware businesses by maximizing our deliveries and deployments, as these products will deliver increasing value to our customers over time via the services powered by AI. Every Tesla vehicle delivered today is designed for autonomy, while every Tesla energy storage product is capable of being enhanced and optimized by our virtual power plant. I can't talk to you guys, sorry, or auto bidder functionality. We continue to deliver a fleet of products that brings AI into the real world as we pursue a future of sustainable abundance as outlined in their master plan part 5. While we face near-term uncertainty from shifting trade, tariff, and fiscal policy, and of course that's affecting Tesla a little bit right now, we are focused on long-term growth and value creation. We are prudently making the necessary investments in our business, including future business lines. We're going to be talking a lot about that. But we believe will drive incredible value for Tesla and the world across transport, energy, and robotics. Now into their financials, we're going to get a little deeper into this, why this is the way it is. Okay, so total automotive revenues was up 6% year over year. We've actually seen a return to growth here. That's nice. 20.2 billion, but only up 6% year over year. But I think that's the wrong thing to focus on. Energy generation and storage up 44% year over year, doing phenomenally well. And I believe that there's been a lot of talk about AI, what to power AI, and they talked about this in the conference call a little bit as well, which we'll talk about. But there's a lot of talk about, well, we got to build power plants. There's a lot of natural gas that is being utilized for this. But I think if AI continues to build out, and it is building out, I mean, companies are spending hundreds and hundreds of billions of dollars in these infrastructure. It's going to have to be powered by something, and this is an exceedingly profitable section for Tesla, even though it is actually their margins are getting hit because of the tariffs. Because of course a lot of this is produced in China. They are still providing to other customers outside of the U.S. But so when that whole mess is filled up, fixed up there, that'll make a difference as well. Services and other revenue is up 25%, so very strong as well, 3.4 billion. So we had total revenues of 28.09 billion dollars, and that was up 12% year over year. Again, we've seen very strong. So the last, since last year, it's just been up, and we have record revenue. So what is the bad news with that, right? What is the bad news? We're going to get a little deeper into this. Operating expenses were up 50%. And I've seen a lot of bears talk about this and being like, this should not be happening. Your total expenses are up 12%, while your operating expenses are up 50%. Well, while it's not great, you got to keep in mind what Tesla is doing. This is a shift. They're changing. And we're going to get into why those operating expenses were so high here on the next slide here. So income from operations is down 40%, so about 1.6 billion, still much better than the last couple quarters. And their operating margin was, been doing as better as well, but down, roughly over 5%, 501 basis points from a year ago. So net income attributable to the stockholders was 1.3 billion. That's down 37%. We've still seen an increase from the last, the turning point from the last couple quarters, of course, but still significantly down. We're going to talk about that. EPS down 37% for 39 cents as well. Bright spot net cash provided by operating activities. We're not going to go through the statement of cash flows, but it was flat at 6.2 billion, and look at how we've seen this increase over the last several quarters. It's definitely improved a lot, even though it is flat year over year. And of course, for a growing company, what is pivotal? Cash is up 24%. We're at 41.6 billion. From last quarter, we're up about 5 billion. With how these financials have not been doing great, how we've seen them struggling, restructuring, changing their business, going into AI, going into robotaxi, building for the future, we saw an increase of $5 billion. 33.6 billion, 36.5 billion, 36.9 billion, 36.7, and now we're at 41.67 billion dollars. So they need the cash, and that is very strong. And of course, Tesla's balance sheet is just phenomenally strong in terms of what they have, the cash and essentially no debt. So the question is, why, as we saw back here, why do we see a 50% increase in operating expenses? Okay, so total, this gives you a little more granularity. We could go to their actual financials, but they include this, and this is pretty good. Automotive regulatory credits, we didn't talk about that, has actually gone down a bit as well, because those are getting phased out, and they've essentially, part of them is being completely phased out. So our total automotive revenue is $21.2 billion. Energy, generation, storage, 3.4, and services and other 3.4. So again, that gives us a $28.09 billion in total revenue. Now we're going to go to the cost of those revenues, right? So the total cost for the automotive revenues was 17.5. So that's huge compared to the last several quarters. And of course, a huge portion of that is, lowering prices, different things like that, tariffs, right? So you're going to see that get hammered more, obviously, right? Energy generation storage costs were up as well, but of course their revenue is growing very fast in that segment. So that gives us a gross profit of $5 billion, 5.01. Still better than the last 4 quarters. So where did that huge increase came? So we saw a little bit of it in here, like I explained. Of course, automotive revenues have taken a hit, and that's something that's everybody's aware of course. But as the company pivots away from that, they're still going to be generating revenue from that, of course, right? But it rolls more into their robotaxi and how they're going to be making all this money off services. If you were just looking at their gross profit, I think the quarter would have been a lot different, right? It would have been up, if that was actually the bottom line, but it's not. So if we go into the actual operating expenses, R&D, $1.6 billion, right? That's up significantly, right? And again, we were hurt last quarter and the quarter before that, but from a year over year quarter, it's like $600 million more. And I always applaud research and development. And of course, we know they're developing robots, AI, like crazy stuff. So when you look at a 50% operating expenses increase, well, it's justified, especially by that. SG&A, again, this is maybe not as bright spot, was up significantly, 1.5 billion. Some of this had to do with lawsuits, some of it had to do with other administrative stuff that may not be as relevant going forward. And of course, they had some restructuring that was higher as well. So when you take into account of that, their total operating expenses, as we noted on the last slide, $3.4 billion. So that's where you're really seeing that hit to the bottom line. Income from operations was $1.6 billion versus 2.7 a year ago. We go from gross profit down to the income from operations, and therefore our net income, of course, is 1.389 billion, which was, if we go back here, down roughly 37% from a year ago. So when you look at it from this perspective, I can understand why the stock went positive today. It's easy to look at it from a simplistic view and go, oh, well, their operating expenses, that's not supposed to be happening. But you don't realize what's happening behind the scenes, how they're ramping up that research and development, and how this is not going to matter as much. Still, nonetheless, total production was down actually 5%, which we'd expect. This quarter will 447,000 vehicles. But their total deliveries were up 7%, and this is an all-time record. So that's impressive, And we saw that report come out just recently about this quarterly, the quarterly numbers, right? So even given that, all the geopolitical stuff and the political stuff, oh my gosh, right? We still see that strength there. When we talk about what's more exciting for the business, storage deployed in terms of gigawatt hours was up 81%, 12.5 gigawatt hours. And this is going to be a huge part, and people have been saying this for years, this is going to be a huge part of Tesla's business. Tesla locations, their mobile service fleet, 15%, their locations were up by 15%, their mobile service fleet was down by 12%. This is something that I would hope that they continue to do more, but they seem to almost be phasing out just a little bit here, right? So it'll be interesting to watch that going forward. In terms of their supercharger locations, up 16%, and their supercharger connectors up 18%. All very relevant to all the products that they're going to be having in terms of their actual vehicles, and maybe even the robotics, because those are going to have to charge as well, depending on where that goes, right? So let me just put on my do not disturb here, because I forgot to do that, so we don't get disturbed here. So again, this is just a real quick summary of a lot of the current installed annual vehicle capacity that they're dealing with right now. Cybercab is under construction. Tesla Semi is under construction. We're going to talk about that. And the Roadster, well, design development. I'm not too sure if we're ever going to see that. And quite frankly, I don't think I really care about that much anymore, right? What the stock is priced in for the stock price of Tesla and what's coming is going to be AI specifically, and Optimus, and self-driving cars that they're going to be implementing as a service, and some other things as well. So, I mean, just to give you an idea, a lot of people are saying, oh, this Tesla buy, it's not going to be into the 2030s. Well, keep in mind, we're like 4 months away from, or we're 2 months away from 2026. So we're roughly 4 years away from 2030. And there was this is a pretty verifiable rumor that Tesla placed an order for about $685 million in actuators from a Chinese supplier. And this volume, I won't read the whole thing here, is enough to build around 180,000 robots. And this is essentially going to be Q1, Q2 that they're going to be taking delivery of this. Like, we're just getting started here. So if Tesla wasn't confident that they would be selling these and they would be going into production, 180,000 right there. And Tesla, or Elon Musk rather, has talked a lot about how hard the hand is, like how difficult the hand is, how amazing it is. And there's been some rumors that they've had some issues, of course, with producing their own actuators, because basically there's not a supply chain in place for a lot of this, right? So this kind of jives in place that they're kind of getting a little help with that. And just to give you an idea, right? I mean, we're taking an order for 160,000 or 180,000 right now. Even if you had 1 million robots, Elon, he's very optimistic, says they're going to be scaling up to 50, 100 million. But if you just 1 million robots and you had a 5% net margin, which is basically where Tesla's at right now, which is low, like way too low for this, but I mean, exceedingly optimistic. Even though a million robots might be a little ways away, you're looking at like $1.25 billion to the bottom line. That's $40 a share right there, and that doesn't even include like the Megapack, Robotaxi, the Tesla Semi, or any of the AI, the implementation with Grok. I really hope that Tesla takes a stake in Grok, or there's a lot more integration, because that's really going to justify the price. So in terms of the conference call here, guys, because the video is getting a little bit long here, full self-driving. Okay, Elon has always been super bullish about full self-driving, but he feels that they're at the point right now where they have to scale quickly, because they feel like they've essentially achieved full self-driving. I think he made some comment like it's going to like blow the doors off. It's going to be tsunami. People don't realize what's coming. As we all know, they started in Texas, and they expect that there's going to be no safety drivers in Austin there by the end of the year. But of course, they're being paranoid. End of the year is only 2 months away, roughly, right? Well, a little bit more, but anyway, close. They expect to be operating in other states by the end of the year. Right now, they're also in the Bay Area, and I think they list out like 5 other states that they expect to be in. This is going to be a huge revenue, if it goes, a massive revenue driver for Tesla. Like, you can start running some of the numbers on that. I just gave you like, oh yeah, like a $40 a share if we just have a million of those. If this works, that's going to be massive. And it's actually interesting to see them actually operating this in some areas. And a lot of people have talked about competition like Waymo. Frankly, give me a break that they're more advanced. I don't know where people come out with that. The newest version of FSD is essentially blowing people's minds, right? In terms of Mega Block, this is where he basically spoke about how long power plants are to build. And I was actually surprised he didn't really reference AI with that. But he just basically talked about how advanced this is now, how much more energy is going to be required on the grid, things like that. And I agree with that. So that's another huge portion of business people don't even really talk about. He said that Optimus is on the cusp of something incredible, essentially. They have all the real world AI that they need, and the ability to scale production. He talked about basically all the different components that Tesla has that he doesn't believe that anybody else has. And I've thought about this since Optimus was first announced and someone came out in a suit, right, or in that little Optimus suit, that they have all that data in terms of FSD, like millions and millions and millions and millions of miles, right? And that's going to be so helpful in giving them a competitive advantage against, all the other competitors that are out there right now. There's quite a few, but I don't think that they're nearly as advanced, nor do you have the ability to get invested as a retail investor right now in them, right? They want to unveil version 3. Probably it's going to happen in Q1. And he's basically saying it's going to be like a person in a robot suit. You're going to have to pinch it essentially to know it's not real. He keeps going on about his whole thing about there's going to be no poverty. Basically, we're going to be living in an age of abundance. Optimus will be an incredible surgeon. I think these are way more of a pipe dream, and way in the future. So maybe this is the portion that he's a little bit too optimistic in, but we'll see. I do believe that these are going to be coming soon to factories. They're going to drive down costs of products like crazy. You can get them down to like sub $25,000 a robot. That was my assumption up here, about $25,000 a robot, right? In terms of Cybercab in Austin, as we know, it's expanded 3 times from the launch. It's now in the Bay Area, and Cybercab production is going to start in Q2. So again, coming up quick here. And if they're going to be ramping up production, they must feel confident that this is going to be rolling out quick and not something that's like 10 years in the future, right? So of course, I've been in the past, I've been bearish on Tesla, but I don't think people realize what's coming with this, and it might take a while. Like it's always takes longer than you think. I've been a little bit nervous of how Tesla's run up, right? Being 152% in a short period of time is always concerning for me, but I have a long term view on the stock, right? Like 5, 10 years, right? But you still got to keep in mind that it's expensive. It's an expensive stock, and I used to look at stocks like this. Like I remember when Amazon was 300, trading at 300 times earnings, and a lot of other different tech companies. I mean, that's just insane. There's no way they're going to grow into that. Well, they did. And Tesla is trading incredibly rich. They're at a $1.43 trillion market cap. But I do believe myself, just personally, and this is my own opinion, that they will be, at the likes of the other companies in terms of market capitalizations that they're at right now, 4 trillion plus. I believe it's going to come. It's just a matter of when. But we could see a pullback in the near term, especially if the markets pull back, because Tesla tends to follow the markets quite a bit. So there's a big risk for that. So I'm going to be watching this stock. I'm going to be seeing, if it runs into the $500-$600 range, I might trim, even though I have a really long-term perspective on Tesla. It's just they're trading so rich right now. It all depends on how quick they start ramping up the production of these other products. But I'd love to know what you guys think. You think I'm way off the money? It's been a long time since I've been very bullish on Tesla, but I think that there's a lot that people are missing. Let me know what you think, guys. Just like the video, that's all I need, and I'll see you in the next one.